I'm Mike Revy, CEO of Bulla Network. Bulla does something very simple. It just mints IOUs and UMEs.
Todd Ziegler, I'm the CEO of TCS, and we make freight invoice settlement 90% faster and cheaper on chain.
I'm Brad Grimm. I own a trucking company, and I'm a customer with TCS as well as Bulla, and here to represent the success so far with the team here.
Hi everyone, I'm Aidan Yeaw. I'm the Chief Operating Officer of Node 40, a portfolio company of Chain Reaction, which was on the last panel. Node 40 does data analytics for blockchain assets. We really focus on the economic analysis, whether there was a gain or loss or any type of accounting treatment to what happened on chain.
And I'm Jake Lynch. I'm an investment partner at L1D. We run two strategies, a liquid fund-to-fund strategy and a venture strategy, all in crypto, and we've done several investments in RWAs.
Great, and my name is John D'Agostino. I'm head of institutional strategy for Coinbase, which means I speak at conferences and lead our efforts for strategic initiatives like setting up in offshore jurisdictions, think about new product design. I have a special interest in asset tokenization because I used to be head of strategy for the New York Mercantile Exchange, which was the largest commodities exchange in the world. And what we thought about 15 years ago was very interestingly very similar. So we thought about using futures as, this is pre-blockchain, but we use futures as simple synthetic instruments to futurize difficult assets. Obviously commodities being one, but we talked about prediction markets back then. So a lot of stuff that's happening now, like poly market was my idea 15 years ago, and I failed miserably at it because the market just wasn't ready. So seeing blockchain as an improvement and seeing tokenization as an improvement to what futures were able to do is really fascinating. But I kind of want to start with a broad question, then we'll dig into the success story behind TCS. So towards what I just said, we see these asset classes and markets that seem ripe for disintermediation. So whether it's real estate brokerage, Ticketmaster is one of my favorite examples. You have a stranglehold over this market. It's despised by the issuers. It's despised by the consumers. Everybody hates it. You don't need blockchain to get rid of it, but it's been around, and it probably will be around for at least another 5 to 10 years. So let's just talk, before we get into the details, and I kind of want to start with you. So structurally, what are the characteristics of a market you look to think it's primed for disintermediation? Blockchain aside, just ready for it. Put the technology aside for a second. As an investor, what types of asset characteristics are you looking for, market characteristics, that you think can be successful?
So within RWAs?
Within RWAs, yes.
So, within RWAs, primarily what we're looking for is not crowded. So there's a lot of people trying the low-hanging fruit. You hear a lot about treasuries and stable coins and things like this.
Right.
These seem to be extremely difficult to compete in. And so we like these like alternative asset, exotic plays, or as you mentioned, ticketing. Ticketing is an example of a company that we invested in this year called XP, which is doing essentially RWA tickets on Solana. And one of the reasons we like it is there's starting to become regulatory tailwinds. There used to be regulatory headwinds. Ticketmaster obviously getting broken up by the DOJ and so on. And these types of paradigm shifts are, really attractive from this point of view.
I think people underestimate the need for third-party intervention in some of these entrenched markets. Like
Certainly.
Real estate brokerage in the U.S. only moved from 6% to 2% because the DOJ antitrust came in and forced it to. I think that's right. And to your point about non-competitive markets, like I hear lots of attempts at tokenizing oil or gold, and I think it will eventually, but it trades like water on futures, so it seems like a very challenging thing. So Todd, you're the kind of linchpin for everybody here in terms of use case of TCS. Why did that market interest you?
Yeah, so I'm an attorney by education, but I've spent the last 10 years in the transportation industry. And the single largest problem in the $2 trillion United States supply chain is the cost and time associated with trade finance. It's the problem that nobody talks about, right? Shipper pay terms are 30 to 180 days. And just to kind of zoom out for a second, this commercial paper, this RWA, this is good stuff, right? A lot of it's Fortune 1000 paper, right? And this stuff is all monetizing or being paid out over the course of 30 to 180 days. But if you're a 5-truck operator You can't wait 30 days to get paid. You sure as hell can't wait 180 days to get paid. So what all of these companies do is they have to sell their invoices to third parties. These are known as factoring companies in the transportation industry. When you use the analogy of Ticketmaster, I thought that was perfect. Because everybody hates factoring companies, right? I mean, the word factoring is loathed and despised in the transportation
Why?
industry.
Is it because they're disingenuous, they're corrupt?
It's because the majority of these factoring companies either are banks or they're subsidiaries of banks, and they charge usurious fees, and even to use them, you're still waiting 10 days to get paid. Whereas if we do this on chain through TCS, we're able to get these transportation companies to cash in 1 to 2 business days, 90% cheaper than any of the other alternatives that are out there now. Right. And now all of a sudden, all of these real-world assets, these freight receivables, can move on chain. They can move into Web3. And there's a lot of really interesting stuff that can be done there in terms of creating security tokens, yields for accredited investors, et cetera. But it really is a main street use case of digital assets and blockchain.
So, Mike, you were a trader, right?
Yes.
You were a trader.
Guilty.
What'd you trade, by the way?
Convertibles.
You trade converts? Okay. So you hear that. You hear, okay, we've got this. What I heard was fragmented market, owned by central points of liquidity, i.e. the banks. What the big thing I heard was mispriced risk premium. Yeah. Meaning you mentioned before like about a 1.5% default rate on these invoices.
Aggregate.
That the banks are charging as if it's 9 or 10, right?
Yes.
Yep.
So that's an arb there, right? That should get you excited as a trader.
Huge
but as a trader, you also know that those inefficiencies stay inefficient for a really, really long time. So again, why do you think that this is working or this can work?
Well, you're tapping into a whole new, to the blockchain, to DeFi. And if you can, markets improve with better information. And that's what we're doing. We're putting it on chain. You can see who issued the invoice. You can see who funded it. You can see what pool it's in. The pool itself is a smart contract, so I can't hide the P's. I can't re-hypothecate like my prime broker would do with me. So it's just we're tapping into a better system, a more liquid system with better information, and that should bring price discovery.
Do you need to find new buyers for that paper?
I do right now, yes, but it's 12.5% right now, or better for USDC. I think that's awfully good for 1.5%.
Commercial buyers or retail buyers?
Right now we're not set up for retail yet, but I would like to do that. Yes, I'd like to open it up. Right now it's private, like 6 addresses, but the intent is to show the information. People can see it all. They can see who's issued it, and then price accordingly. And we should get a repricing and credit at some point.
So Node 40 does this type of analysis. Is it do like credit analysis and to help people solve that problem of picking that good or bad credit? Or?
We don't do that, John. Thanks for asking. So essentially what we do at Node 40 is we take everything that's actually already happened, so the transaction that's already happened, and we put like an economic value to it. So if you don't know if you have a gain or loss, for example, on a simple buy or sell, we help figure that out. Now, where we fit in the TCS ecosystem, and this is where we're really excited to partner with them, is that we're going to be powering the actual analysis, so the truckers in most cases can actually come up with like an idea of what they will owe maybe in taxes, and having a proper accounting treatment on what's going to happen. Because if you imagine like, the last mile problem in a lot of things is like, let's unleash crypto to the world, but then we're going to sock them with an accounting problem. These are long haul truckers, right? Mm-hmm. So that's an unfair thing. So we give a lot of credit to Todd and Mike for having the foresight to say like, we don't want to tackle this problem. Who can? So that we don't screw over these truckers. There's millions of them, so that they actually can have they have a wallet that's tied to like an analysis that we can provide to say like, hey, you'll have a gain or loss, so you can bring this to your account to file your taxes. So not everyone is thinking that way. I mean, in everyone else is, this type of infrastructure is an afterthought on most digital asset plays, but this is the example of where tokenization, to get into the real world, you need the infrastructure pieces. We're one sliver of this infrastructure. KYC is another one, right? Yeah. But like this is like a key aspect in the way we're.
But that's super important because again, in these disintermediation plays, people forget that the incumbents, while it's expensive and inefficient, they solve those problems. right?
Yeah.
The truckers don't have to worry about that. So, Brad, this is a great segue to you. So you own a trucking, so you're president of a trucking company. 8 years, right? You're doing it for 8 years. Okay.
Yeah, that's right.
So kind of walk us through, I understand why at the point of view of your company level, this is a fantastic solution, but at the trucker level, at the independent trucker level, how do they think about engaging? How does this improve their lives in a meaningful way?
Yeah, so like Todd was talking about, factoring companies are loathed in the industry. They're hated. You have bank issues. They put fraud alerts on everything all the time. They lock up the banks. They do all kinds of stuff. Factoring companies will intentionally hold up invoices sometimes because one of their employees missed something or something like that. And this solution right here cuts through a lot of the baggage that these factoring companies have. And everything's on the blockchain, so everything you can see everything. It's right out there. There's nothing hidden. We've had factoring companies literally steal money, quite frankly, and you can't do that on the blockchain. Everything's there, everything's clear. So far, things have been faster, cheaper, easier. And we've dealt with a lot of different banks, a lot of different factoring companies. I think this can very well explode. And right now one of our carriers is doing 100% of their receivables on the blockchain, and it's working very well.
Todd, what's the hardest part of the sales process? So Brad's all in.
Mm-hmm.
But when you're sitting down with 10 Brads from 10 different trucking companies, what is the hardest part of the sale?
Yeah, I want to zoom out for just a second. A lot of people don't realize this, but over the course of the last 2 years, we're in a boom-bust cycle right now in the trucking industry. And for anybody that doesn't know, 72% of all goods in this country are on a truck at some point, right? This has been the worst bust cycle, I think, in recorded history in the trucking and logistics industry over the course of the last 2 years. We have lost 50,000 American transportation companies since COVID, okay? And in my opinion, one of the biggest reasons for that is the cost and time associated with factoring invoices. And I just have to give this example really quickly to answer your question about business development and demand. If I have a $10,000 Walmart invoice, okay, and I'm a trucking company, I'm going to pay 3 to 6% of gross to get paid in 10 days by my factoring company, okay? Well, my net revenue on a $10,000 load, if I'm lucky, may be 10%. It may be $1,000, okay? If I'm spending $300 or $500 to get paid in 10 days on that invoice, that's 30, 40, 50% of my net revenue. That's how the sausage is being made right now in this industry. And again, this is a $2 trillion industry just in the United States. We don't have a demand problem. We have more demand right now than we can even facilitate. There is not enough liquidity in all of DeFi to facilitate the demand that TCS has at scale. We have a $150 million revenue pipeline of transportation users that want to go live right now. Okay, so what we're trying, and that's with no formal marketing or advertising of any kind. We're not out there running billboards. Our logos aren't on any truck trailers yet. They will be, okay? But we don't have a demand problem. What we've been trying to do is build liquidity partnerships, and I really hate to say this, it's been very frustrating as a guy that came from the transportation industry, but we've had so much support from the transportation industry and so little support from the blockchain, digital asset, crypto industry. Everybody talks about real-world use cases. Everybody talks about Main Street use cases. You know, this is like the antithesis of meme tokens, right? So what we need is we need to continue to build those strategic partnerships so we can bring this thing to scale. Because to the point that Brad made, we think that this solution is so infinitely superior to everything else that's out there. I mean, I shared with you earlier, our largest competitor, the largest freight factoring company in the United States, is managing $60 billion a year in AUM. Okay, they're slow, they're expensive, they're antiquated. There just is no solution.
This is the factoring business.
Yeah. Yeah,
Okay.
they're
When you
just
say
it.
when you say no support, you mean there's just no buy-side interest in the paper, or what?
No, we need partnerships with centralized exchanges. We need more liquidity relationships, and I will give Coinbase a lot of credit. Like we've started working on some things with Coinbase, and we have active business cases with some other exchanges. All of this right now exists in DeFi. It's all being managed over at Uniswap, but we just think like this is the Satoshi thesis applied to the single largest problem in the $2 trillion supply chain. And I'm just really looking forward to the day where everybody says, damn, that was a really good idea. I wish I had gotten in sooner.
Just remind me, who's from BBA? Is this Chatham House rules?
No.
Any press here? Not Chatham House rules, there is press here? There's no press. Recorded?
Yes.
Okay. Okay. So
If I need to retract anything, I will.
why don't, Jake, why don't you ask him if these are securities?
I will happily answer that question.
I mean, I would take it a step further, right? I would say the demand side of the equation is definitely there. Like we do see a lot of people who need credit and who really want to borrow and tap into the industry. But the challenge that we're seeing across the board in this sector is like the supply side is pretty weak. When my opportunity cost, and let's say your average demographic is a 25-year-old male who has a little bit of spending income, their opportunity cost is they either take $10 and put it in something earning 15% year over year. There's a little bit of duration risk. There's a little bit of trust and all of that stuff. Or they can put it in a meme coin and make maybe 10x in 24 hours. It's not a hard decision for them, right? So now what we go to is when we're talking about supply side, the thing that comes pretty clear is like, okay, the organizations that can't access traditional financial instruments, right? And that's been winning. That's been working. So like, somebody like the Arbitrum Foundation, who has raised a ton of money, has a crazy amount of dollars in tokens, but not necessarily dollars in a bank account. Well, they need access to these products because they can't put it in a meme coin. They need to be diversified across all of that. But this supply issue is tough because the Arbitrum Foundation can definitely be an accredited investor, qualified investor, whatever you want to call it, right? But the rest of that liquidity is gray money, not accredited, or just frankly just doesn't want to put their information in something that they don't have time to do diligence on, right? And I think that's really the main challenge with the security aspect of it.
I do want to qualify, John. I'm not so much talking about TCS token because accredited parties right now can participate in this ecosystem by investing in the liquidity pools at Bulla. Now they have to be accredited, right? And that Bulla is creating yield generating products, yield that pays better than U.S. Treasuries, that is secured against what is mostly Fortune 1000 shipper paper, right? So there's a way to participate. Like if you don't want to buy tokens or whatever, that's fine. There's a way to participate in the ecosystem outside of the digital asset play. But in my mind, mitigating the costs associated with moving goods to market is beneficial to everybody. It's beneficial to the transportation industry. It's beneficial to every household and consumer. And I would argue it's extremely beneficial to the blockchain industry because we need to be rallying around these use cases.
Mike, what's that product look like? What's the yield? What yield are you offering right now?
12 and a quarter.
12 and a quarter, is that
per annum?
Per annum.
Yeah.
Cash quarterly or monthly? Or?
You can redeem and deposit as you like. Depends on how much money is in the smart contract at any given time.
Okay.
So if I'm 100% invested, then you can't redeem, but then you get on a list to do redemption as we collect on invoices.
What's the longest period of time anyone's not been able to redeem?
30 days.
Oh, 30 days. That's the max time I couldn't get out.
Yeah. We will. Sorry to interrupt, but we will add also a way to trade they're called BFT tokens, Bulla Finance tokens. So if you want to get out early, you will know what the accrued is.
Okay.
And you can there'll be a market. Of course, it'll be a little below accrued.
Okay.
But not quite at redemption.
And how long have you been running this?
20 days.
20 days.
20 days.
Okay. So early to ask, but any sense of what your bad debt ratio is?
Well, zero as far as I know.
Well, yeah, industry-wide, it's about 1.5%. But just like, and I hate to liken us to a factoring company at all, because I look at TCS as a blockchain as a service settlement company, but we have to vet every invoice that comes through the door, right? We KYC AML our carrier relationships, our transportation relationships, but every invoice that they send to us, we have to independently vet. We don't have an obligation to buy it, right? If it's Fortune 1000 paper, we're buying it right now.
Yeah.
If it's Bob's Carpet Barn and Bob's on the brink of a Chapter 11, we're going to pass on that invoice. So there is a lot of due diligence going on behind the scenes as it relates to default.
My exposure to Bulla, that 12.5%, how diversified is that pool of underlying?
Right now, it's only TCS sourced paper.
And how diversified is that?
Pretty diversified.
Okay. So I guess what I'm leading. So here, for those of you who aren't kids who want 800x on their meeting point, how many of you here would be really happy with 12.5% paper, cash on cash, with 30-day liquidity at this point in your life?
Secured against Fortune 1000
with
shippers.
With a 1.5% or lower default rate. Like I want it. Like that. Like I can't find
it's a no-brainer.
when treasuries, when munis hit 5.25 in New York, I was buying them like hotcakes.
Yes.
That's about an 8% tax return. It is crazy to me that this isn't more popular. So I want to spend the next 10 minutes even asking each of you with a thesis of what is the major challenge to cracking, maybe not even not accredited investors in the U.S. Not high net worth, but just accredited, 200,000, 1 million net worth. There was a huge chunk of those in the U.S. Why have these types of yield products not been able to crack into that market? I'll start with you.
Yeah, I'd say the distribution platforms aren't in place yet. We've seen tons of crowdfunding platforms over the years that aren't in digital assets. We're not seeing this yet for something that TCS and Bulla are doing yet. I often think of as I wear my East Boston gear and stuff around, people stop and ask me about crypto all the time, right? I'm sure it happens to everyone. And usually they're young people or fresh out of college or something like that. And they say, like, where do I jump into crypto? I'm like, wait, crypto's coming for you. Now, in the case of the truckers, right, here we are. The crypto has come to them. It's not like a trucker, and Brad could probably speak to this. He didn't probably wake up a year ago and said, I can't wait to get into crypto or digital assets or something, right? Or tokenization. It's just like TCS delivered it to him.
Right.
So we need something on the other side of the platform, as Todd has explained. Like, he's got a ton of demand, but we need some liquidity into the system. Something similar has to happen on the other side of the coin to say, like, because there are people, like we just did a straw poll. There's a ton of people looking for a better yield on something, right? 12.5% is probably 600 basis points better than anything else you're going to get out there.
Investing in America.
So,
Brad, what'd your trucker buddies say when you're getting into crypto? Come on, be honest.
Well, a lot of them are scared of it. So
sure.
What we need to do is create a platform where it almost looks like something they're used to, something that looks like more like a bank. And if you do it right, it might not even look like crypto. They might just kind of sit into it naturally and say, oh, this is just a different service. This is how I get my invoices paid. And I think that's very possible with some good marketing and some good onboarding.
We need better UIs.
Good user experience.
We need
Absolutely.
We need UIs that look normal. And not scary.
Yeah, black screens.
Sure.
Get rid of those.
I might disagree with that. I think
Which part?
The better UI side. Of course, I would love better UI, but I used to work in internal accounting at a Fortune 500 firm, and I can guarantee you.
Don't give off internal.
I know.
No.
And I can guarantee you that the people I was working with are kind of that target demo, and they were using the worst UIs I have ever seen in my life. Our people love snappy UIs, high click, 100x lever, right? You need a latency of less than 100 milliseconds. That's the crypto people. They love that. But the people who are looking for, fixed income products or lower risk products, they're comfortable with bad UI. I'll tell you what I think they need. I think they need to be able to, first of all, probably the biggest barrier here, and we've seen this since 2020, 21, has been interest rates, right? interest rates being high has just clogged up a lot of demand. Beyond that, it also prevents you from kind of levering against some of these fixed income products to find the risk level that you're looking for and the yield that you're looking for. So, a lot of people will say 12.5%, that maybe not my number to take on some of this additional crypto risk, but if that additional crypto risk is fixed and the levered risk can be dynamic, right? Then you don't take on additional crypto risk if you increase the yield that you're getting.
Right, but what crypto risk are they taking by buying this paper?
There's natural crypto risk. It's the same type of risk that you would have as a counterparty, right? Now, you just imagine the smart contracts are your counterparty. TCS is a counterparty here, right? They all exist.
That's fair, but they're not taking any risk to the token, right?
Unless USDC were to depeg
That's fair.
or
That's a fair
USDC.
point.
No, I'm not talking about the
That's a
token
fair
risk.
point.
Yeah.
Look, when NYMEX created the jet fuel contract a long time ago, I remember I was so excited because this solves a huge problem airlines have. They can hedge their jet fuel exposure. And our marketing team failed miserably. They couldn't sell the contract. And I remember I jumped on the call because this was my product and this is really smart. They should all love it. And I remember being on the phone with American Airlines, the CFO. And we pitched it, and he was like, "Yeah, we don't do futures trading." And he goes, and he said, "We don't speculate. We're an airline. We don't speculate on jet fuel prices." And I almost jumped through the phone. I'm like, "That's the freaking point. You're short jet fuel if you don't use my product. You're speculating. If you use my product, you're not."
Right.
And it just took a while. It just took a while to get people comfortable because the reality is they had to hire a futures trade. They had to.
But I think you're making my point.
Sorry?
When was that? Late 90s?
I'm not that old.
Yeah, you don't look that old. But
It was 2007.
Wow.
Yeah.
That's too recent for someone to react that way.
I think you're kind of making the point, though, is
Yeah.
at the end of the day, the thing that gets people there, the thing that pushes people over the edge, is the money. It's the risk and it's always a risk return calculation.
It's the yields and it's the assets and that's I think one of the greatest things about this ecosystem is again it is about blockchain and digital assets, but it's not. These carriers just want their money. They want faster and cheaper settlement, and they can't get it anywhere else. Once that paper is onboarded. They're not to say that anything is risk-free, but for my money, I would rather get a 12% annualized yield against some type of digital representation of collateralized Walmart receivable than invested into U.S. Treasuries. And I think the reason that we don't have more volume and activity yet is because, in fairness to Mike and I, we've been building out these tech stacks for about 2 years, right? And we've gone through kind of a dark period in crypto over that time. Right. But this is now here, right? And we're finally in a position to scale this up. So I believe that the demand will come from the accredited side.
So Mike, you talk to commercials right now, or you talk to sophisticated buyers of credit instruments. They can look at this information off the blockchain, not off the blockchain, and they can come to a reasonable conclusion around how much exposure they want to take.
Yes.
How can even a sophisticated accredited, right? So I'm a accredited investor. I view myself as fairly sophisticated, but in certain, I know commodities cold, I know equity, I know options, derivatives cold. I actually don't know credit that well. I just never grew up in it. It was never really. Can I run a model? Fine, but I'm not a credit expert. I'd be a bit intimidated looking at that pool on my own. So how do we get to a point where the way people are playing around with real estate yields on these apps? How do we get to a point where a moderately sophisticated accredited investor who doesn't know a lot about credit can feel comfortable swiping on an app and buying these tranches directly?
I think it's in the history. So if you can look at the token that you bought at $1, and now it's consistently gone up to 123, and you redeem a few times, you've got deposits, redemptions, the history is there. The history will tell you it's not always the future, but it does give you an indication of how good the product is. The other thing is addresses. Bulla, the reason I named my company Bulla is because Bulla is an old name for stamp or for signing things. And when I was a bond trader, my word was my bond. Bought at 105.
Yep.
right? I mean, even if I lost all the paperwork, I
Don't
still
retrade.
bought, right?
Don't retrade.
So
Yep.
it's the same idea. If I mint an IOU or you owe me and I sign it, then I'm saying you owe me money, right? Whether it's true or not depends on my history. And I think as you get more history of payments on chain, you're going to get better and better credit metrics. There's a great company called Spectral, for example, a couple of others that measure payments and measure, whether these addresses are really true or not. So.
And Aidan, do you see your product helping individual retail investors solve those tax problems, accounting problems as well, or is it more geared towards?
We're geared more towards institutions, and this is the first time we've actually worked with an entity like Todd's at TCS Blockchain, because technically we're contracting with TCS, not as individuals. We have just a way of delivering our capabilities as a kind of feature within the product that Todd's offering through TCS. But normally, our normal, off-the-shelf offering is mostly sold to accounting firms, big crypto funds. We're getting a lot of interest from Solana validators. So usually we are the data that feeds their accountants.
Yeah, and can I add something?
Please.
So the other issue, I think, with tokenization of invoicing is you're not going to jettison your current accounting system just to get stuff on chain to put into a pool, right? You need to have the whole package pretty much in place before any Walmart, for example, doesn't have a wallet right now.
Right.
They should. Imagine you seeing your own AR flowing through on a pool. You could arb that all day.
Yes.
Especially at 12.5%, right?
Absolutely.
So why not get a wallet and hey corporate, let's make some money here.
Yeah.
But we need all the tools and people being comfortable with those, and that's why Node 40 takes. We just have ARAP and a couple of other pretty good accounting tools, but nothing like Node 40 for a real audit and things like
Brad,
that.
how hard was the onboarding process? Sorry. How hard was the onboarding process for you? Getting up and running on this.
Yeah, so like I said, I think we can continually improve that. It was a little more cumbersome, but I think with a few improvements, it could be just as easy as a traditional factoring company type of thing in the industry. In fact, it probably could be easier once it gets really refined. I'm sure it could be faster, easier. People can be processing receivables very quickly, and so it was pretty good, not too bad.
And if I can, Brad, what we're doing right now is effectively OTC, right? Over in DeFi land on Uniswap. Really, in order for a carrier to onboard once we've got more integrations in place with centralized exchanges, all they need to do is sign a security and settlement agreement, just like they would do over in the factoring world, right? You got to sign it, send a PDF to TCS. We complete our KYC AML, and they have a wallet on an exchange that TCS can directly deposit tokens to. That's it. It's a two-step process.
So these would be securities on centralized exchanges?
No,
would not.
TCS is a non-security digital asset.
Okay.
Right.
I thought you just said security.
We have no. We have carriers sign a security and settlement agreement.
Got it. Okay.
Right. Which is really about managing recourse, default risks, those types of things.
Okay.
It's very similar to a factoring agreement. I would argue, though, the most important distinction beyond faster and cheaper settlement, and granted, that's important. Okay, if you're a trucking or a logistics company anywhere in the United States or Canada, and you go to a factoring company, you're probably having to give them a personal guarantee. You're probably collateralizing all of your business assets, and you're giving them exclusivity on all of your existing and future invoices. TCS does not have any exclusivity requirement. If you don't like faster and cheaper settlement on chain, you walk away. You go back to your factoring company. You go back to waiting 90 days to collect from XYZ shipper.
Okay.
You can walk.
I would say that was crucial to trying it out because you don't lock yourself into like a cumbersome UCC filing or anything like that on your business. So yeah, the ability to try it out And so since we tried it, and for some reason we do like faster and cheaper invoicing, so we stayed, right?
Huh?
And so
For all
I
of
think
all
that's
your factoring, or do you split it between traditional?
no, we're doing 100% of receivables on this carrier at this point. Yeah.
And how long? For how long?
It's been what, another month or
Almost 30 days, yeah.
month.
No speed bumps, no issues.
No, it's been much better so far. Yeah.
So Jake, let's talk about the when you look at these projects to invest in, the decision for decentralized versus centralized projects, and do you have a preference? How do you think about that?
I mean, all of these, every project in this sector needs to be centralized to an extent, and then there's increasingly centralized. I think what we tend to see is like, if you do have aspirations to go in a decentralized fashion, you can't do it from the start.
Yep.
Like, you have to start centralized, and it has to be. Nobody pays you to be decentralized, right? You actually kind of get paid more to be centralized because like there's somebody to hold accountable for it, right? Especially if you have to go in the U.S. court system, or we see a lot of emerging markets credit, and they have to go into Brazilian court system or something very foreign. You want a centralized party there to work for you. So that's what we're seeing, generally speaking, when we talk about this part of the supply chain. The lending side, as you get to the Bulla side, you can get more decentralized, and it's easier to kind of spread it out.
And I will share too. In my mind, maybe we get there in the future, but it would be impossible to be entirely decentralized because at the end of the day, somebody has to collect from these shippers, right? TCS, just like a factoring company, manages those collections, right? You got to make sure that the end debtor or the end payor actually ACHs the funds to a business checking account, right? So we could get there. We could get there in the future in terms of automation and decentralization, but I think we're a while away.
Who eats defaults?
On paper, TCS does.
First loss.
Wow.
Okay,
First
but we do have recourse rights by contract against our carriers. So if a carrier sells us an invoice, the invoice may be good, the payer or the debtor may be good, but maybe there's a claim on the load. Maybe 50% of those strawberries went bad in transit, right? We would then have recourse rights against our user to cover that gap, and we're not going to take them to court over it. We're not going to say, write us a check tomorrow, but we are going to have to work that out on the next couple loads, right? To recourse that loss back.
Got it. Okay. Any questions, by the way? We've got about 5 minutes left. If there's any questions, we can take them now. Yes, sir. Oh, I'm sorry. He has the mic, and you're next.
Aidan. Bobby Buckley with Coinbase. John, good to see you.
How you doing?
How's it going? Just wondering on the TCS side, how portable do you see this to other industries in terms of receivables? Is this very specific to trucking because of the lower default rate, or?
Factoring is a major problem. It's a systemic problem in most industries. My background is in trucking and logistics, and the problem is really rampant there because pay terms are. I can't tell you how many Fortune 500 companies are net 180. People don't believe me when I tell them that, like, you deliver a load of widgets from California to Manhattan, and you get a piece of paper that says, we'll pay you in 6 months. That is industry standard. But we believe that this solution can scale to every industry where you have factoring companies, banks, intermediaries charging these usurious rates to manage B2B settlement.
Thanks. I'm Greg. I have maybe 2 questions. First, if I'm a trucker, and this could be actually anyone in that part of this type of deal, are you asking me to set up a wallet and receive payment digitally, or is that all happening prior to? Are they being paid in fiat, and that's all happening within kind of the TCS framework?
Yeah, you're getting paid on an exchange, right? If you're on an exchange in the future, right, on a centralized exchange, you have a wallet. We directly deposit tokens to that wallet. In DeFi, those tokens can go to MetaMask or some type of other wallet. And then TCS is the buyer of last resort when a transportation company divests. Most of these companies, they're not investing in crypto. They're not arbing meme tokens, right? They need to get to cash. It costs like $1,600 to fill up a truck with diesel, right? So they need to get to cash. So most of them want to divest 100% of their tokens when they get them. we can actually facilitate that entire settlement process in about 45 seconds. From the time those tokens hit their wallet to the time they sell to the market and TCS buys those tokens back, we can facilitate that whole settlement in 45 seconds to a minute.
And how is that education process, or is there an education process? That seems like a big step to me, is getting people unfamiliar with this world,
Yeah.
who
Yeah,
kind of live
Brad.
daily lives to accept that.
I want Brad to answer.
Yeah,
When your employees come to you and say, how do you get them comfortable with this notion that ultimately the company's being paid in tokens, not cash?
Well, they just think it's cool. Our employees, but they don't. A lot of them don't.
Truckers are known degens, so like
They are.
Yes, true.
dive all into this.
I wanted to add this really quick, Brad. 50% of the trucking companies that have reached out to us organically have dipped their toes. They had a Coinbase account. They had a wallet somewhere else. Like they are familiar. I just wanted to add that point.
So I'd say for the future, hopefully truckers, all they need, like even independent owner operators, single man operations, if they have a Coinbase account, that might be all they need later in the future. Hopefully, if these partnerships work out, and that's not too bad. It's pretty user friendly. You'll get your tokens, you sell them for cash, and you send it to your bank. So it would be pretty easy. Right now, you do need to be a little more crypto savvy, because you got to do some decentralized stuff. But once we get on those centralized, then it's just going to be a lot easier. But yeah, the truckers out there, they think this stuff's cool, and they are looking for something better, because factoring and Todd was talking about the margins, right? So even the very largest trucking companies, they're running 4-6% margins every day. And if you're losing 2% through invoicing, I mean, that's massive. So, yeah, hopefully.
One question. On the liquidity pools, what exactly are they? Are they Uniswap liquidity pools? Are they concentrated liquidity pools? What if the volatility of the TCS token goes up or down? Can I participate, not participate? How does that work?
It's more simple. It's very simple. All it is anytime he mints an invoice, he sends it to the pool. The pool underwriter code decides whether it wants to finance it at a particular rate, and then it goes into the pool. We send him some USDC. We wait to then collect on the USDC on the original invoice. That's all it's doing. It's very simple. Then there are a few other functions. We have a tax thing in there. Right now, we're not sure how it will be taxed, so it's in there. And then there's a fee and a protocol fee, and that's it. And then to deposit and redeem, right now, it's too simple now. It needs to be a little more refined, but however much money is in the pool, that's how much can go out, based on the price of the token.